Inflation is rising again, and it has a lot of people wondering, are we heading for another financial squeeze? For the fourth month in a row, inflation has climbed. It now sits at 3.0%, up from 2.9% last month. And it's not just headline inflation, core inflation is rising too. It's now at 3.3%, up from 3.2% the previous month. So what does that actually mean? It means prices are going up, and they're going up across the board. Groceries, rent, gas, almost everything you buy is costing more. And here's the real question: will the Federal Reserve be able to stop it? Or are we looking at a long period of higher costs with no relief in sight? Stick around, because we're breaking it all down. We'll talk about what's causing these price increases, what it means for your money, and when, if ever, you can expect interest rates to come down. Now, let's get into it. Inflation has been climbing for 4 straight months, and it's starting to feel like a trend. One of the biggest drivers of inflation right now? Shelter costs. Rent and home prices are still rising, and that's pushing core inflation higher. And it's not just housing. Food prices are also up, 0.4% month over month. That might not sound like a lot, but over the course of a year, that adds up to significantly higher grocery bills. And some items have gone up even more. Egg prices, for example, have increased 53% over the past 12 months. Used car prices? Up 2.2%. Insurance costs? Up 2%. And energy prices, which had been dropping for the past couple of years, are now up 1.1%. That shift in energy prices is important. For a while, lower energy costs helped offset inflation in other areas. Now that energy prices are rising again, it's only making things worse. This means higher heating bills, higher transportation costs, and more expensive goods across the board. And here's where it gets even more concerning. Inflation is not just about numbers, it's about how much your paycheck can actually buy. When prices rise faster than wages, people struggle. Even if your income goes up by 3% a year, if inflation is at 3.3%, you're actually losing purchasing power. That's why so many people are feeling financially squeezed, even though, technically, wages are increasing. And before we go any further, let me quickly ask, if you're finding this video helpful, make sure to subscribe to Benefit Genius. We break down financial trends, inflation, and investing, and we do it in a way that's easy to understand. So, if you want to stay informed and make smart financial decisions, go ahead and hit that subscribe button. Alright, back to it. Let's talk about interest rates. The Federal Reserve's goal is to bring inflation back down to 2.0%. Just a few months ago, it looked like they were on track. Inflation was slowing, and a lot of people expected rate cuts to start early this year. But now? That's looking less and less likely. The mentality has shifted. First, people thought, this is just a small bump in the road. Then, it became, wait, inflation might be stalling. And now, it's turning into, hold on, inflation is actually accelerating again. So what does the data actually say about future rate cuts? Let's take a look at the CME Fed Watch tool. This tool tracks market expectations for interest rate changes. Before the latest inflation report, 96% of analysts believed that the Federal Reserve would not cut interest rates in March. After the report came out, that number jumped to 97.5%. Basically, this inflation data made it even less likely that the Fed will cut rates anytime soon. And what about the next meeting in May? Before the report, there was a 78.7% chance that the Fed would keep rates the same. Now, that probability has increased to 88.5%. And what about later in the year? Well, right now, the market believes that the first interest rate cut won't happen until September. And even then, there's a lot of uncertainty. So, let's talk about what the Federal Reserve is saying. Federal Reserve Chair Jerome Powell testified before Congress this week, and his message was clear. The Fed is not in a hurry to cut rates. He warned that cutting rates too soon or by too much could undo the progress they've made on inflation. He also said they're watching the data closely. And if inflation doesn't keep moving down toward 2%, they will hold off on cutting rates. But Powell also acknowledged something important. People are feeling the squeeze. Yes, the economy is technically doing well. GDP growth is strong. The stock market is near record highs. Unemployment is low. But the average person doesn't feel like they're thriving. Why? Because inflation over the past few years has taken a toll. Even though wages have increased, they haven't kept up with the cost of living. That's why, even though the economy looks good on paper, many families are still struggling to afford basic necessities. And this is key, because inflation isn't just about numbers. It's about real people trying to pay their bills, buy groceries, and afford rent. And when those prices rise faster than paychecks, people feel it. So, what does all of this mean for you and your money? Let's break it down into 4 key takeaways. First, if you're planning to buy a home, don't expect lower mortgage rates anytime soon. Interest rates are still high, and with the Federal Reserve holding off on cuts, they're likely to stay that way for most of the year. If you're waiting for rates to drop before buying, you may be waiting a while. Second, expect prices to stay high for a while. Food, rent, insurance, these costs aren't coming down anytime soon. Inflation might slow, but that doesn't mean prices will go back to where they were. So, if you're struggling to keep up, now is the time to reevaluate your budget and make sure you're prepared. Third, keep an eye on energy prices. If energy costs keep rising, they could push inflation even higher. That would make it even harder for the Fed to bring prices under control. And finally, don't expect rate cuts to come to the rescue anytime soon. The Fed has made it clear, they will not cut rates until they're confident inflation is under control. That means borrowing costs for mortgages, car loans, and credit cards will stay high. So if you're carrying debt, now might be a good time to focus on paying it down. The bottom line? We're in a period of economic uncertainty. Inflation is still running hot. The Fed is holding firm on interest rates. And for the average person, the cost of living is still painfully high. That's why staying informed is more important than ever. And if you want to stay ahead of the curve, make sure you're subscribed to Benefit Genius. We break down economic trends and financial news in a way that's easy to understand, so you can make smarter money decisions. That's it for today. Thanks for watching, and we'll see you in the next video.